Welcome to our special economic coverage. Global growth is under pressure tonight as the International Monetary Fund warns that rising oil prices and escalating conflict in the Middle East are weighing on the world economy. Tensions are also rising on the ground. Bloomberg reports Iran is considering temporarily halting shipments through the Strait of Hormuz after testing a U.S. counter-blockade. The move follows Washington's decision to block vessels to and from Iran after failed ceasefire talks earlier this month. U.S. Central Command says no ships have breached the blockade so far, with several turning back. With energy flows under strain, markets are watching closely for any further escalation.
The United States military began major combat operations in Iran.
קרא משטר הרשע באיראן, מוות לישראל, מוות לאמריקה.
The International Monetary Fund has lowered its global growth forecast for 2026, blaming rising oil prices caused by the Middle East conflict and disruptions in the Strait of Hormuz. At its spring meetings, the International Monetary Fund presented three possible scenarios: a baseline, an adverse case, and a severe one. The baseline assumes the conflict will be short. In that case, oil would average about $82 per barrel this year, but prices are already much higher, around $96. The IMF chief economist Pierre Oliver warned that the situation may already be getting worse. He said the world is drifting towards the adverse scenario where the conflict lasts longer and oil stays closer to $100 per barrel. The International Monetary Fund has expected the United States to remain relatively stable, with growth at 2.3%. The Eurozone is more exposed to rising energy costs, with growth slowing to 1.1%. China is forecast to grow 4.4%, while Japan remains weak at 0.7%. Emerging markets face greater pressure, with growth projected to fall to 3.9%. One expectation is India, which continues to stand out with strong growth of 6.5%. The Middle East is expected to be hit hardest. Regional growth could drop to 1.9%, with sharp contractions in countries such as Iran and Qatar. According to the International Monetary, if the conflict escalates, oil prices could surge to around $110 to $125 per barrel. It added that the global growth could fall to 2% near recession levels. Moreover, inflation could rise above 6%. Such a scenario would likely force central banks to raise interest rates again, adding further strain on the global economy. Pierre Oliver warned that each new disruption in energy markets increases the risk of a deeper slowdown. And for further analysis, we're joined from London by CEO of QW Capital, Lobby Fellow, Gianluca Lobby Fellow. A very warm welcome, sir, to Qnews, and it's a pleasure to have you with us, our distinguished guest. Sir, the International Monetary Fund says the global economy is drifting toward a worse scenario. How serious is this shift in your view, sir?
Obviously, at the moment, these are forecast conditions on the length of this war. So they are now assessing new forecasts versus the previous one they were assessed, they were communicated in January. So we're talking 3 months ago. It's obvious that if you think about the one that they provide us with before, were just a month or let's say 40 days before the attack by Israel and US on Iran manifested. So these pre-war forecasts, obviously they were more on the upward. So for most of the area, there was an expectation of marginal growth in both Middle East, Central Asia, that are the ones that actually are now having the more negative forecast, but as well China and US and Euro area. Now what we're seeing is that we're seeing there is still the growth we are going to be in a growth period for the world, but there is a slowdown, particularly affecting the weakest economy, who obviously, or geographically, or because of their import-export balance, are more affected by this war. So Middle East, Central Asia, obviously China, because it's a big import of oil coming particularly through the famous Strait of Hormuz, Europe, and obviously one who is seeing less affected by this war, paradoxically, is the US, because comparing this to the previous shock, oil shock that we had in the 1970s, at the time US was a net importer of oil, now is a net exporter of oil. So it benefits of this increased oil price. Now, the other side of the equation is inflation. So problem is that we're seeing that the IMF provide us with forecasts of a slower growth, but as well higher inflation. For the time being, we're seeing only marginal increase of inflation. So that's what we're
Okay, sir, I want to ask you here, when you answered me, sir, when I asked you the question, you said they are assessing the situation before and they're assessing the situation now. And they're comparing. Could you please elaborate more on what you're meaning and who are exactly assessing? And also you mentioned growth. In which context did you mean growth? Growth of what?
Yes, so basically I was making a comparison between the last forecast we had by the IMF and the World Bank that were released at the end of January of this year. So basically a month, 40 days before the war in Iran erupted. So we were seeing that obviously when we normally when we compare IMF or World Bank forecast, we try to see what is their trend. It's not just the number. So now they're saying the world growth will be around 3.1%. But what is relevant of this 3.1% is that let's compare to the previous forecast. So the previous,
you mean, sir, before the war?
Before the war, so in January 26.
I got your point.
Yeah, and so clearly it's evident that what they're telling us that is as any war, and particularly any war in the area where there is so much dependency on, specifically in this case, on the energy production, energy export, there is a double effect. So there is on one side, the expectation for growth who are decreasing. So from specifically globally, we're from 3.3 to 3.1. But the other side of the equation is that inflation from 4.1 to 4.4 is increasing. So there is a kind of stagflation shock. Now, before calling and using this very heavy word of stagflation that can scare every listener, we have to be
stagflation, sir?
Stagflation means the first 3 or 4 letters stag come from stagnation. And the second part is inflation. So that is basically the worst case scenario where you have that there is no growth and there is inflation. Now, we are far away, let's be clear, we are far away from this situation, but the trend of the last forecast pre to the war and the one we're seeing now, they are heading towards a slowdown in growth and increase in inflation. It's fair to say that the increase in inflation seems to be for the time being moderate. So we're not seeing anywhere near level of inflation compared to the 2022 we had, or to the 1970s, not even. Now, if this is the case, this is contained, but that has to do with the length of the war. So the IMF is saying, look, we are looking at 3.1 in growth expectation for 2026, but they make clear, Gorincias make clear, the head of Pierre-Olivier Gorincia make clear that that's assuming that the war will end soon. If the war gets protracted, so is the length of the war, he can envisage a growth that go down from 3.1 to 2%. Now, 2% start to be much more dangerous because eventually If there is a slowdown 2%, very likely it will be accompanied, unfortunately, by a higher level of inflation versus the 4.4 they're forecasting now. And that means that the potential slowdown, almost stagnating economy with a higher inflation can drive towards a scenario that we want to avoid, is stagflation. Why we want to avoid that? Because that is where central banks are completely powerless. They cannot increase rate to contrast inflation, even though they have to do, because it's their mandate. But on the other side, there is a slowing economy. So yes, the US Federal Reserve, as you know, has a dual mandate of controlling price pressure, so inflation, and trying to guarantee full employment. But most of the other central banks have one mandate, so they have to control inflation. So in theory, paradoxically, if we have a stagflation, they have to increase rate or no cutting rate because they have to contrast inflation, is their mandate. But they are doing so in a period of slowdown of the economy.
Okay, Mr. Lobafello, don't you see, in light of all these complexities, that the length of this war should end as soon as possible? Or how do you read the situation at this point? And how much of the current economic risk comes down to oil prices alone, not to mention what we've been discussing since the beginning of the interview?
Yeah, so there are two things here. Obviously, you pointed out something very important, the length. Clearly, let's go beyond the economy. We all hope that the war ends like any war from a humanitarian point of view. That's it. It goes without saying. And frankly, not everybody is seeing any meaning for this war. The real problem behind is that there is the geopolitical re-equilibrium with China. I mean, this is to me is a proxy war. I mean, again, I hope that like the one with Russia, Ukraine will end soon, and there is no war in whatsoever in any corner of the world. But these are proxy wars. This is not specifically Iran or the threat of Iran versus Israel. That is real, is possible, but I don't see why Iran has increased its threat versus the last 2 years, right? There is clearly something more to that. And there is the geopolitical equilibrium. There is the relevance of China. The one who is more affected with this war is China, because China imports 80% of its oil that goes through the Strait of Hormuz, and they haven't replenished their reserve. So clearly this is a war, but China is not going to be stay there and looking at. Today, they already announced that unless there is a resolution very fast, they may postpone the meeting that's supposed to happen in May with the US. So Xi Jinping is starting to talk very loudly. Don't forget, there is always the Taiwan issue on the table. China can decide to move forward Taiwan. So there is a huge change in the chessboard, in the global chessboard.
Sir, if oil reaches $110 or higher, what does that mean for inflation globally? Of course, considering everything you said, that China will intervene and Taiwan will intervene, and there is a meeting that China is thinking of calling off. How do you read the situation at this point?
Yeah, I mean, we talk about oil, but don't forget that when you talk about oil, you talk about anything related to that, apart from fertilizer. Even if they're not related to oil, they go through the Strait of Hormuz. But there are as well direct implications for the scarcity of oil and energy, even for medicine, for pharmaceutical, to do with oncologic treatment. So the disruption goes well beyond oil. Yes, we can try to make a forecast of what $110 can mean in terms of oil versus the 95 this morning, or even the 120. But oil in itself is just an indicator, is a gauge for this tension. But the implication, the spillover, is much wider. So this war hopefully will find a solution, because having in this very moment a trade blockade like the one we have can have huge negative implication. It's not just the oil.
Sir, could central banks be forced to raise interest rates again, despite a slowing growth, sir?
For sure. I mean, don't forget that before the war, so let's go back to January 26, the central bank of the Fed, US Federal Reserve, was supposed to cut twice the rate by 25 basis points for a total of 50 basis points in 2026. They were the market expectation. And you had the Bank of England was supposed to cut it twice. The Central Bank of Europe, the ECB, was supposed to be on hold because he cut more rate last year. And the only bank who was supposed to increase rate because it's on a tightening mode was the Bank of Japan. Moving forward 2 months, we have that the expectation in the market, I'm not saying that's what's happening, but that's what the market expects, is for the Federal Reserve not to cut rate, eventually only in 2027, for the Bank of England not to cut rate, for the ECB to eventually increase rate from being on hold, and for the Bank of Japan to continue increase rate, even though postpone it a bit because they need to see what's happening for the implication of growth due to the war. So we are seeing that, as you pointed out, that from being in a situation where there was a loosening bias, so central bank were either on hold or cutting rate, apart from the Bank of Japan. The other, now we move from hold to increase rate. So I don't expect increasing rate at this level of inflation, but even the only thing
so,
that...
sir, the answer is no, you don't expect an increase of rates.
No, for the time being, but more importantly is that we were supposed to see cut of rates. And now we are seeing, you are asking me if we are expecting increase of rates. 2 months ago, you would have asked me when we expect the next cut. That's what has changed.
Because of the war, everything changed.
Of course.
So there will not be any. There will not be any cut of rates. There will be increase of rates.
If things stay as they are, if oil price don't go down, I doubt we're gonna see cut of rates this year. But again,
sir,
things can change.
Go ahead. Sorry.
No, but things can change. So it all depends on the duration of this war.
But if things continue like this, sir, then we're moving on into a catastrophe.
If it's a catastrophe, then is another issue. So if it's a catastrophe, obviously, even if oil price goes very high, if there is a catastrophe and there is no growth, obviously inflation don't necessarily increase. So yes, we still can have the stagflation scenario that I told you before. There would be the catastrophe, as you pointed out. But let's hope that is not the case. For the time being, we are not seeing cut of rates, but potential increase of rates. For the time being, I would say most central banks will be on hold, so they won't change their stance. They will be monitoring, be very vigilant, but the market is also expecting cut of rate, but is not expecting on the other side increase of rates. If things degenerate, triggering an inflation spike, yes, we may see some increase of rate, but since this will be accompanied by a slowdown in growth, my expectation would be that we don't see any move of central bank. That's to my central case this year.
Sir, why is the Eurozone more vulnerable to this shock than the United States, sir? And how do you read, sir, that these countries that are involved in this war would soon be aware of the global economic crisis that's going to take place soon, very soon?
Yeah. I mean, the reason why we're seeing that the US is not expecting to slow down much less than Europe is simply because US is an oil exporter. So paradoxically, US will benefit by increasing price of oil, at least from this side, whereas Europe is a big importer of energy. So the disruption, by definition, will impact more the European industry than the US industry. And then there are as well consideration in terms of defense, a budget of defense that actually will support the growth in the US and as well in Europe, but more in US than in Europe. So it's a bit complex in the situation. But for sure, if we're to be very linear and only concentrate on the impact of energy price, definitely this war is impacting much more Europe than US. And don't forget that Europe already came out of very big damage by the war in Russia-Ukraine. 40% of the gas import in Europe was coming from Russia. And now we are replacing that with LNG, so liquefied gas coming from the US, to cost us 4 times what we are costing the one in Russia. We are replacing part of that with import from Northern Africa, but it's not enough.
Sir, are you optimistic or are you pessimistic about the ongoings in 10 seconds? Because I have to wrap up.
Yeah, I hope, I want to be an optimistic. I really hope that logic will prevail and they will find a solution for this war. I don't see, frankly, the point for the war in general.
Nobody sees, sir.
Yeah, exactly.
From London, that was CEO of QW Capital, Gianluca Lobafello. Sir, thank you very much for your insights, your in-depth analysis, and of course, on top of all, your informative and intellectual knowledge and your time. Bloomberg has reported that Iran is considering temporarily halting shipments through the Strait of Hormuz. The move appears aimed at avoiding a breakdown in dialogue after testing a U.S. counter-blockade. Earlier, U.S. began blocking vessels traveling to and from Iran from passing through the strait after the two sides failed to reach an agreement in their first ceasefire talks on April the 11th. The measure was intended to stop Iran from transporting oil and goods through Hormuz. The United States Central Command has reported that no ships have breached its naval blockade of Iran's ports and coastal areas. During the first 24 hours, 6 merchant vessels complied with U.S. directives and turned back toward ports in the Gulf of Oman. The command noted that the operation involves more than about 10,000 personnel, over a dozen warships and dozens of aircraft. Officials stated that the blockade is being enforced impartially on vessels of all nations entering or leaving Iranian ports. And for further analysis, we're joined from London by political and economic analyst Babak Imamian. A very warm welcome, sir, to the program, and welcome to Qnews. Sir, how is the United States blockade of Iranian ports along the Strait of Hormuz affecting global oil markets, especially in terms of supply reliability and price volatility?
Good morning to you, and thank you for your question. Well, if we look at it, this is, according to all reporting, this is the largest disruption of oil supply. So in terms of 20% of disruption in the world supply, and yet the oil prices are falling. They are at $95 per barrel. So if you could just disrupt the supply of 20%, and yet the oil prices start dropping, that means that there are alternative supplies right now. There is no shortage of supply, of oil supply. And more importantly, this is not a crisis.
What is the crisis, sir?
I beg your pardon?
I said, what is the crisis?
The crisis, economic crisis. They were saying this would cause a big economic crisis. IMF is saying they could cause recession in the world economy. I don't believe that. First of all, IMF has always been wrong on its prediction, most of its predictions.
Sir, you said the IMF has always been what? Because I didn't listen well.
Wrong on its predictions.
Wrong?
Yes.
On its predictions. Okay, sir, I got your point.
Yeah. America last year, when they were saying the U.S. economy would grow with only 1.7%, and yet the U.S. economy grew last year at 4.3%. So what I'm trying to say is it's very political, IMF, when it comes to actually giving its predictions. And right now, it's very much European-based. And the European governments are trying to blame this disruption in supply as the cause of any fall in their economy, in the growth of their economy, when they have much bigger problems, such as the Ukraine war, which has become a forever war. The other thing is following this net zero green policy. The other one is high taxes, high regulation. Yet they never discuss those issues. They just talk about, oh, this US-Iran war is going to have massive impact on their economy, which is not the case. It would increase the inflation by 0.5% to 1%. But getting back again to this issue, it just shows that this war is contained. It's not going to spill over to other issues. And right now, the nature of US-Iran war has changed from military to economic right now. So this blockade is now that next phase, the economic warfare.
Sir, what are the direct economic costs for the Iran of halting or sharply reducing its Hormuz-bound ships in terms of lost oil revenue, foreign exchange earnings, and trade finance access?
Well, thank you for that precise question. If you look at the Iran economy and divide it into external trade and domestic trade. If we look at the domestic trade, first of all, the domestic economy, there is not a single unit of profitable production or services in Iran unless it is subsidized by government grants or subsidies. So what I'm trying to say is all production lines in Iran or services, they are unprofitable. They are at loss. The only way they become profitable if they have government subsidies or government grants. And where does the government can afford to give them subsidies and grants is by oil revenue, by export of oil and having oil revenue. This way, they could inject that into form of grants and subsidies to the domestic economy. If that is cut off, all these production lines, all these services would go bust tomorrow. And that is what is happening. There is a threat of massive unemployment in Iran of 4 to 5 million, even maybe getting to 15 million. Because again, I emphasize, there is so much mismanagement in the domestic policy that there is not a single unit of production which is profitable on its own. So Iran regime is desperate.
Can you give me an example, sir, please?
Otherwise, its domestic economy would fall. Also, it has lost an ally in form of UAE. 33% of Iran international trade was done through UAE. And the UAE also set the exchange rate for Iran currency to dollar. That was because of the extent of external trade through UAE. Now they've lost that because UAE
yes,
has totally disconnected to Iran. So so that's the reason why even now to set the exchange rate for the Iranian currency is either Iran has to go to Herat in Afghanistan or Suleimaniye in Kurdistan.
Sir, how exposed are European and Asian energy importing economies to even a partial disruption of Hormuz traffic, and what contingency plans do they have in place?
Well, if we look at it, first of all, this hike in the oil prices, which is not a major issue. If I give you a historical comparison, in 1973, a barrel of oil was $3. And then there was a hike, and within 6 years from $3, it went to $34. So it was like 10 to 11 times increase in the oil prices. Right now, we are seeing oil prices going from $60 to $95 or $100 or $110. We are now seeing a crisis of $60 going to $600 or $700. So that's what I'm saying. If we look at the historical side of it.
Okay, Mr. Babak, $3 hike to $34 is a 10 to 11 times. If we are discussing what you just said of $60 to $100 or to $110, then that's how many times?
That's 1.5 times.
1.5. So it's nothing compared to what happened in 1973.
So in 1970, it went up by 10 times. Now it's gone up by 1.5 times.
So that's good news?
That's a very good news. It's manageable. It is absolutely manageable. It is not an issue. So you asked me about the impact of it. I think the maximum impact would be that the cut in the interest rate in certain countries would be delayed. That's all that would happen, because inflation may not decline as they were expecting it to decline. Inflation actually might go up by 0.5%, a maximum by 1%. So there will be a delay in interest rate cuts. So the cost of money would be a little bit higher, but it would not be like hugely higher. So there will be an impact, but it's not like a massive impact on the growth of the economy.
Sir, to what extent can Iran reroute its oil and trade through alternative land-based routes or overland corridors? And how economically viable are these options compared with seaborne exports?
Well, that's a very good question. And everyone is asking that question, the redirection. Can Iran redirect its export through other countries, through other routes, land routes? Almost no, it's not possible. It's not cost effective. The infrastructure for it is not there. But then again, I go back. It's not only about physical exports of oil, crude oil or petrochemical or steel or other forms of export, but also of UAE in terms of access to international funds. Iran access to international funds was through UAE. Now, there is no alternative right now. Maximum, it may be through the Afghanistan or again, Kurdistan, which they're not in any form comparable to the UAE. So I'm saying there's two aspects of it. One is the physical side of it. The other one is the financial side of it, which now it is strangling Iranian economy.
How is the blockade impacting global shipping costs, insurance premiums, and vessel routing patterns in the Gulf and Indian Ocean, sir?
Well, the U.S. blockade is very effective. We've seen that in the U.S.-Iran war that the U.S. detection rate is very high. They can detect any movement. They are able to detect targets in Iran. So detecting shipping is very easy. Because they can detect which ships are who or what, they can also manage the blockade much easier at much lower cost. Now, because the blockade is effective and very efficient, now the Iranians know this is a serious issue, that hopefully they would, in the next round of negotiation, there will be resolution to this conflict. And
so, sir, I buy from your words now that in the next, in the second round of negotiations, there will be a resolution to this conflict?
I'm not saying 100%, but I'm saying we are getting closer to a resolution. But more importantly, we are making the Iran regime to become more realistic about the situation. The Iranian regime live their own reality. They really think they are invincible, they are untouchable, and they can go on forever. That is not the case. We've seen that they can be damaged easily. They cannot defend themselves. Right now, they have no money. There is a power struggle within the regime. There is no chain of command. And more importantly, we don't know yet who is the real leader yet. There is no absolute leadership right now. So right now, the regime is in chaos, but the lack of money is the most important aspect to the regime right now. There is very little money in regime.
Sir, what economic leverage does NATO's refusal to back or formally participate in the United States blockade give Iran? And how does it complicate the collective security dimensions of the crisis?
Well, the NATO, and when we discuss NATO, we mean Europeans, and we mean the European members of NATO. Some of them, it's very interesting. When it comes to Ukraine, they act very Churchillian, and they are forever war. When it comes to Iran, they become Chamberlain, the prime minister in 1938, who had a peace treaty with Hitler, and presumed by a piece of paper he can stop Hitler. Similarly, here right now, there is that presumption on the Europeans that by having a piece of paper, a negotiation with Iran without any military action, can stop Iran nuclear program. which is not the case. Again, we are back in 1938 Munich, that Munich Treaty, which then the Europeans presumed by just a piece of paper they can stop Hitler. Similarly, I see the same sentiments right now in Europe. We are back in 1938, where we think with a piece of paper we can stop Iran nuclear program.
From London, that was political and economic analyst Babak Imamian. Thank you very much for your insights, your informative and intellectual knowledge, and on top of all, your time, sir. And now, for the latest updates and breaking developments, we turn over to our colleague Hani Saif in the newsroom. Hani?
Thank you, Rana. Good morning, everyone, and welcome to our economic top stories, where we will be bringing you the latest news and developments from around the world. Oil prices fell for a second day on Wednesday on expectations peace talks between the US and Iran may resume and supply will eventually be released from the key Middle East producing region trapped by the closure of the Strait of Hormuz. Brent crude futures were down 0.2% to $94.63 a barrel after falling 4.6% in the previous session. US West Texas Intermediate crude was 0.8% higher to $90.58 a barrel. Gold prices fell after hitting a one-month high earlier in the session on Wednesday as prospects of another round of peace talks between the US and Iran lifted risk appetite, while rising oil prices added to higher inflation woes. Spot gold was down 0.6% at $4,811.19 an ounce, after hitting its highest since March 18th earlier. U.S. gold futures for June delivery fell 0.3% to $4,834.4. Bullion is up 1.3% so far this week. Among other metals, spot silver fell 0.3% to $79.31 an ounce. Iranian President Masoud Pezeshkian says Tehran does not want the war to continue and is calling for respect for international law. Pezeshkian said Iran has no desire to remain in a war it was forced to fight. He also called on the other side to abide by international law in its dealings with Tehran, in remarks reflecting Iran's push to frame its position as defensive rather than escalatory. IAEA Chief Rafael Grossi says any decision on how long Iran should hold uranium enrichment under a U.S. deal will ultimately be political. Speaking in Seoul, Grossi said Tehran could still agree to a temporary compromise as a confidence-building step. His remarks came after weekend talks between U.S. and Iranian officials ended without a deal. One of the key sticking points remains how long Iran would suspend uranium enrichment under any future agreement.
This is clear. So whether they opt for such...
The U.S. military says American forces have fully halted Iran's sea-based trade through a naval blockade. In a post on X, U.S. Central Command said around 90% of Iran's economy depends on international trade by sea. The announcement came after weekend talks on ending the war collapsed. U.S. President Donald Trump said fresh negotiations could resume in Pakistan within the next 2 days. Italian Prime Minister Giorgia Meloni has stressed the central role of international diplomacy in easing the current crises. Meloni said diplomacy remains essential to de-escalating the ongoing tensions. She also underlined the strategic importance of the Strait of Hormuz, saying it is not only a vital energy route, but also a key artery for food and agricultural security. The Egyptian foreign minister has also met a delegation from the Italian Agency for Development Cooperation on the sidelines of the IMF World Bank spring meetings in Washington to advance bilateral economic and development cooperation. Abdullati emphasized expanding partnerships in renewable energy, infrastructure and water management in line with Egypt's national priorities, alongside enhanced technical exchange. Both sides reviewed ongoing programs supporting service delivery and inclusive growth, while the Italian delegation reaffirmed its commitment to scaling up cooperation and strengthening joint development initiatives in the coming period. That's all for now, but stay with us here on Qnews for continued updates and in-depth special coverage, keeping you informed on the most important stories unfolding across the region and around the world. I'm Hani Saif. Thank you for joining us.